ceremony at Uhuru Park, which was attended by thousands of Kenyans and dignitaries, including heads of state from several African countries. One of the major provisions of the new constitution was the devolution of government operations to 47 counties, each of which would have housing development as one of its mandates. The devolution provided an opportunity for HF to enter into joint ventures with county development authorities to provide an array of value-added services, such as the provision of water infrastructure projects that directly impacted on the housing sector of the counties. One such project was the financing of Embu Water and Sewerage Company, Ewasco, to the tune of 87 million shillings for the construction of a 17-kilometre water pipeline that is expected to expand connectivity to 6,000 households and some 100 schools in Embu County. The year after the referendum would mark the end of the 5-year turnaround strategy that HF's Managing Director Ireri had introduced back in 2006. The strategy had been focused mainly on reducing the large non-performing debt portfolio, which had been stifling HF's capacity to grow. A new strategy that revolved around growth of HF was promulgated in 2011 to cover the years 2012 to 2016. One of the key focuses of the new strategy was to provide a complete suite of retail and corporate banking products and services aimed at serving a new market segment, as well as complementing existing products and services. And the new strategy envisaged a wider footprint for HF as it sought to open more retail banking outlets in strategic locations to reach out to more customers and mobilize cheaper deposits. In 2012, HF would also set up an insurance agency, Housing Finance Insurance Agency HFIA, to ensure its customers would be able to access a complete suite of insurance products under one roof. And HF would also set up a social investment subsidiary, Housing Finance Foundation, which later became the first private entity to spearhead a Vision 2030 flagship project dubbed Army of 1 Million Artisans that focused on upgrading the skills of technical, vocational, and training institutions for sustainable economic development.
When the company decided to form the Housing Finance Foundation, one of the mandates was really to facilitate and catalyze the creation of skilled labor for the building and construction industry. And this arose out of a need that is obvious to all of us, really. The level of construction or the quality of houses out there, we see several buildings collapsing and poor quality and so on. And this simply says one of the key critical factors is skilled labor, lack of skilled labor. What we're trying to do is look at the skills that are required by the industry and trying to make a linkage with the training institutions so that the people that are being trained are actually relevant to the market and can actually address the needs of the market. And we've also been instrumental in facilitating financial access to students with a success rate of mobilizing some funding actually for some of the students from the technical and vocational institutions. A key thing that we do is also trying to create a linkage or the internship program so that the students can actually have a practical experience with the industry. So we offer opportunities for internship and just to enable the students get a hands-on experience of what the industry really requires.
By the end of 2012, HF had revived Kenya Building Society, which had been scaled down to a unit within HFCK back in 2005. Kenya Building Society would immediately embark on the construction of Komarok Phase 5A, whose 162 units were completed the following year, with the sale of the units contributing considerably towards HF Group's profitability. In 2012, HF had gone back to the market for the second tranche of the bond and raised 2.9 billion shillings. HF would also raise additional low-cost long-term funds worth more than 5 billion shillings from international lenders including East African Development Bank, European Investment Bank, and the International Finance Corporation. The March 2013 general election went smoothly, though Raila Odinga again disputed the victory of the winner, Uhuru Kenyatta, who was sworn in as Kenya's fourth president on April 9th that year, succeeding Kibaki, who had served 2 terms. A few months after Uhuru Kenyatta's inauguration as president, HF pioneered the introduction of the 105% mortgage financing product called Ezesha, that enabled young medium-income earners to own homes, without the usual entry barriers related to closing costs, which often discourage many potential mortgage borrowers. As HF approached its 50th anniversary, there would be a major change in its shareholding structure when, on December 31st, 2014, Equity Bank sold its 57,270,000 shares in HF to British American Investment Company at a cost of 2.73 billion shillings in order to start their own mortgage lending. This meant that Britam was now the largest shareholder in HF, with control of more than 40%. The challenges that lie ahead after November 18, 2015, HF's 50th anniversary, are many. Many banks are going into the mortgage business. Cooperative societies are also involved in financing housing construction. But because of its past history and the strategies that HF has developed and continues to develop, HF is most likely to remain the leading institution in the housing mortgage business in Kenya for many years to come. And with its entry into the banking industry through its current account services, it is bound to end up as one of the country's major financial institutions.
We've come up with what we're calling Vision 2020. This is our next 5-year strategy. The first step of this vision was to reorganize the company. And so basically we are now dissolving Housing Finance Company of Kenya, or HFCK as it has been known for many years, and creating a non-operating holding company known as HF Group. We then have the subsidiaries beneath it. We've created a new banking subsidiary. This is now HFC Limited. Then we have Kenya Building Society, KBS, our developer, which will actually be renaming and rebranding. And then we have HF Insurance Agency and HF Foundation. The vision is still built around the real estate value chain. We want to retain our strengths, we want to retain and use our experiences of the past, but also acknowledging that this is a new, evolving, very competitive market. And our vision is that by 2020, we want to be delivering 10,000 houses a year.
We, as a team of the directors and the management, we came together and spent a lot of time in restructuring this company and having a new strategic plan for year 2020. We see us to transform this company to be able to do various activities in this country. One is for us to be able to meet the needs of the young people in this country, because the population of young people is greater than the older people. Secondly, the urban centers are growing. There is rural to urban migration. That must be met by us getting out of Nairobi, specifically larger towns, to smaller towns and opening facilities in that town. The other aspect is the training of members of staff so that they are in sync with modern activities. The bank has to change its way of doing its activities and meeting the needs of our clients or customers in both urban and rural areas. One thing we can add at this point in time is that the housing finance, we are so grateful to many Kenyans who had a chance to have loans from this place and were able today, even their own grandchildren are continuing to benefit from this housing. We are most grateful to their loyalty and the legacy they have left behind.